Okay, let's move on to Zenith Bank. And this is another, one of the top Tier 1, 5 of them that reported last week. And look at the numbers from Zenith Bank as well. And of course, we have to say thank you to all of you. And of course, folks from Stockman sending us a bit of a chart to go through what you call the price chart for Zenith Bank. And that's what you see there on your screen. I'm sure, Olaleko, you can read the candlesticks there and the red lines as you see a major jump between 2012 and 2017 for Zenith Bank. Do you think this trajectory for this particular stock is likely to continue at the current resistance level around 2620?
I like Zenith Bank. I favor Zenith Bank in terms of pricing. I think that Zenith Bank is significantly underpriced in the market. Closed around the 23 naira level yesterday. When you look at Zenith Bank and you look at its price to book, it trades at a price to book of about one time compared to GT that trades around 1.6, 1.7 times. I think Zenith Bank is undervalued. When you look at the results Zenith posted last week, it was also a very impressive performance. The trend observed in Zenith Bank was slightly different from what we see across other banks. Non-interest income was very strong. It was supported by gains in FX trading, particularly from forwards and future transactions. We also saw modest rise in cost, particularly the interest income levels and also the OPEX level. However, we saw a very strong interest income growth. Remember that across most of the banks that reported, we've seen strong interest income, largely supported by the high interest rate environment. And that actually helped Zenith Bank also in their last report. The results posted by Zenith Bank was significantly better than market expectation. And GT Bank has also taken the same direction.
Okay, let's leave the banks a little bit, Olaleko, and let's step into the industrial and consumer goods. And we've seen a bit of a pullback over the last few sessions. Let's start with the two big names here. Of course, they are cousins in the market, Dangote Cement and Dangote Sugar on the other hand. One in industrials, the other in consumer goods. Let's start with the cement giant. And take a look at this price chart very quickly, and then you can talk to what you're seeing there in terms of when Dangote Cement sneezes, the market catches cold. Look at the consistent price growth from 95 naira in 2011 to 245 naira in 2017. And we're pulling that chart out, stock chart there out there for you to see from Stockman. What's your understanding of this very, very strategic straight line all the way to the top, nearing 250 naira per unit?
I think one thing you notice about Dangote Cement is that over the years, Dangote Cement has actually grown. Not only has the price increased, the business itself had actually improved. We've actually seen them divest to other African markets. We've actually also seen profits, bottom line actually increase significantly over the years. It's not surprising that the trend you see in Dangote Cement actually reflects what happens on the market. In terms of market cap, depending on when you look at the data, Dangote Cement account for about 25 to 30% of the Nigerian stock exchange market. So it's understandable when you actually see strong growth in Dangote Cement or a pullback in Dangote Cement actually affect the market. You will agree with me that in recent time, in the last few months, we've actually seen rally in Dangote Cement, and we've seen the stock rise as high as 240, 241 levels. We've seen pullback in recent time, but I would say that it's not peculiar to Dangote Cement alone. It's across the market. We've actually seen GT Bank also pull back. We've seen Zenith Bank pull back. We've seen a couple of the other names also pull back. So you'd agree with me that the trend we see in Dangote Cement is something that is similar to, what we have actually seen across other banks. We favor Dangote Cement in Vertiva. We think that apart from being a good company, it's a good stock, and we expect that earnings will still continue to grow.
Let's talk to the sugar. Sugar market is good. And this stock, look at this price chart very quickly. We have about a few minutes to wrap this up. Olaleko, thank you very much. Let's take a look at this, at how this, the curve here, and we're going to bring that up. You can see the price chart. Look at the red all the way, a very sharp fall from the year 2010 down to 2016 and this very sharp north movement on the candlesticks all the way there for this sugar. Look at the point of inversion there, and talk to us about what is the big story there for Dangote Sugar here.
I think Dangote Sugar, the business has been a very interesting business. It's one of the names that, when you talk to investors in recent time, they want to hear about. They've actually been able to report very strong earnings. Their earnings have been supported by strong or higher price increases, as we have seen across most of the consumer goods names. Apart from that, also, we've seen improvements in energy mix for the company, and that actually supported margin. Apart from that, this year we've actually seen a downward trend in terms of global sugar prices, and that had actually also supported their margins. Apart from that, for their last result, they declared a dividend of about 50 kobo per share, which a lot of market participants were excited about, and it actually led to a sharp rise in the stock price. What we have seen in the last few days is a bit of correction. We've seen a bit of profit taking, and again, I would say that it's not just peculiar to this stock. It's something we have actually observed across most of the stocks we cover.
Okay, we have 1 minute. Olalekan, you have about 40 seconds or so. What's the trouble or the problem with UACN? Look at this chart very quickly and see what we are. Look at this one-time big blue chip on the market. Really, a little bit down in the water. What's your reading as a research analyst as far as UACN is concerned?
I think for UACN, one of the biggest challenges they've been facing in recent years is their huge borrowing. What we've seen from our discussion with management, what we've seen in recent times is trying as much as possible to reduce their cost of borrowing. So we've seen the cost of borrowing actually impact the business significantly, particularly from their subsidiary UPDC. The real estate business is actually being one under significant pressure. We've seen some important or improving outlook for some of their businesses, like the livestock business and a number of the other businesses that are doing pretty well. But the real estate business continues to pull the conglomerate giants back. We think that FX challenges and higher interest costs is one of the key challenges with the business. And as the company looks to diversify its costs,
Olalekan Olabode, thank you very much for your time. My apologies for cutting the respect. We need to take a break. Thank you very much for your analysis. As far as this is concerned, we have a lot more to talk about in the days ahead. We'll take a break. We'll be right back in 2.